Witnessing the pre-market futures being much lower was a good indication that they were not going to confirm the bullish harami, or a harami with bullish confirmation, which required a positive open. That was an immediate indication to start shorting and or closing out long positions that were in weak position or in weak charts. It was more so evident in the NASDAQ, where it opened below the previous day's open and started selling off, kind of a kicker signal. So instead of a bullish harami confirming, this turned into another signal going to the downside, especially with stochastics heading down. This tells us we're probably at least coming back to test the 200-day moving average. This allowed for immediate closing of weak long positions and shorting positions that had good sell signals to them. Today's weak trading permitted investors to start shorting immediately based on signals that were already showing weakness, such as a doji followed by a bearish signal, which closed below the T-line. Friday it did a doji, which told us very simply, if it opened lower, you wanted to be short because that told us the T-line was going to act as resistance. If it opened positive, it told us this trend channel was still in progress. The if-then process told us that if they gapped this down from a doji with stochastics heading down, that they were probably going much lower. This became a perfect short position. This anticipation of what a trend will do based upon the signals was evident also in a short position on hogs today, lean hogs. A doji followed last Friday by weakness. They opened it lower today and moved it up. But notice what was happening. Stochastics were still heading down. We are still witnessing the fact that probably this is a sell-off, so it became a very easy trade that after it moved up, you just put your sell stops at the open. If it came back down through there, it was coming back down through the T-line, coming back down through the open of the previous day, which meant it was probably going to have more selling. What was the magnitude of the selling? In this case, it was pretty extensive, but at least you know that when you're using the signals and executing them in the right direction, that at least you're going to be in the right direction for possibly a big profit day. And we also want to continue that the fact that when you see a pattern, such as a fry pan bottom, and then as we can see, this is a fry pan bottom with a J-hook pattern setup, that you can see where the strength is maintaining in these positions that are coming out of patterns in spite of what the market conditions are doing. This is what allows a candlestick investor to have a high probability of being in the right position at the right time. That'll be it. We'll see you in the chat rooms.